Hello and welcome to Tuesday's excuse me, daily live trading review. It's been an interesting day, for want of a better word. As usual, you can only trade what the market shows you, and that's a key skill. Is when you know not to trade. You can only. There's been lots of posts about news and market sentiment, but as a domestic trader, all you've got to look at is the chart. And you need to learn what the chart shows you and what it doesn't, because it can quite often show you what not to do more than what it can do. So on the open today, we had lack of anything basically. We had a bit of a sell-off overnight, which we were short, and we made some money overnight, which we don't like to do, but anyway. So this was all chop. I know a few people in the room actually took some trades in here, and I'm not going to give anyone grief, but there was no reason to be trading in this. This is all signals that you should not be trading. There's important news out at 9:30, and then German news out at 10:30. I think it was 10 or 10:30 anyway. It doesn't really matter. Just go to Forex Factory calendar, and you can get the news for free. You just need to be aware of it. You can't trade it, and we don't recommend you trade it, but you can trade the aftermath. And I think it was the German ZEW sentiment was so much better than expected. Look what happens. Market rallies. Didn't quite get a pullback here. You might have been a bit preemptive, but this is what happens because market goes up, people take profits, but the overall sentiment is still up, so market carries on. And as long as this price respects this longer term moving average, then you're fine. If it breaks through here, then you need to get out. It's a very, very high probability setup. And look what happens here again. If anyone's listened to yesterday's video post or blog post, whichever, we're up at 20 again. Someone called this today the basically the Great Wall of China. It's important, it's really important, but if it breaks big style. But so far the price has been respected, and this is the third time I think now it's been hit this year to the pip. So we took a short up here, and you need to be really quick at this. The pros are interested in these areas. This is what we look for. We look at the daily range, and we look at the top 10 and the bottom 10%. Obviously you don't know what the range is beforehand, but you look at previous levels. So we were all over this short. We made our money here. Nice, quick, easy. Price comes up, then crashes down, gets messed about. There's some, a bit more data in here, but not a lot. You got to be careful. We always love to play the 0-0s, and you can see how well it's been respected. It comes down, goes up, comes down, but it's in the middle of the range, so you have to be a bit more extra cautious. If it was the top of the range or the bottom of the range, then yeah, it works more. 0-0 or 50. Markets bounced off 75 last week. It's in a 75, but last week it was a 75 to 14, 16 range, but this week it's been a 75 to 20 range. So you need to be aware of these these levels. Price comes down, bounce off 75. Okay, you have to be very careful taking the long here, because if it comes down and breaks, then it can go off the chart. But as soon as price goes up, chops around, comes back down, only gets to 77 on this spike here, then you should be long all the way. We've stopped below 75. The market breaks below 75 or breaks above 20 and you're on the wrong side of it, then you need to get out. Simple as that. As long as these levels are respected, you can trade it all day. Well, 24/7 when the market hits these levels. So price came down, bounced off. Look what happens. Again, we need, there's no way you can take momentum entry here at this time of day, 4:30. It's not. Momentum is London Open, New York Open, or news. You can't really trade this here. It's just, it may work, it may not, but again, you can argue the fact that, look what happened here. So it's market's just chopping around, comes down, doesn't want to test again, Now what's it showing you? It's showing you it does not want to go below 75, just like it does not want to go above 20. If it goes above these levels and you're wrong, then you need to get out. But as long as they hold, then you can play this range. We've been playing this range up last week and this week. And again, we took some money here, not a lot, but we took some money, and then the market comes down, chops, doesn't want to break new lows. What happens? Price goes up, and it's probably going to stay here all night now. We've actually got a shorting up here. With a stop above, above safety stopping, but it's above 20. This range at the moment is going to hold for a little bit, especially overnight, because there's no reason for it to break, because no one's going to be buying up here and no one's going to be selling down here. This range probably, but it will break at some point, and you have to be careful of that. We use this analogy of, the more times someone bangs against the door, the more likely it's to break open. So you have to be careful. This is the fourth, I think, third test. So the next one will be the third, and I think this is probably it's definitely I think it's the third test of 75. So the market's established its range, so you need to be aware of these levels, and that's all you need to do. You don't worry about the chop in the middle. You can't control anything other than yourself. Look for the extremes, and you won't go far wrong. Okay, that's it. Thank you very much for listening. As I say, have a look at our website or Twitter, and I'll catch you tomorrow. Thank you very much.